So I want to start with the pan-European picture, and I want to focus on the competitiveness, trade challenges that we have. Let me make 3 quick points. So first point will be on the challenge, second point will be on resilience, and the third point will be on the way forward. Now, I think the challenge is relatively well understood, it's been extensively discussed. I just want to highlight one aspect of that challenge because it connects to the way forward that I want to emphasize. So that challenge, I think, stems from the fact that Europe has built its growth model on an export-led strategy. And that has changed. We have external shocks, we have the change in the geopolitical environment, we have well-known competitiveness problems, and so I think that strategy has paid off, but doesn't work anymore. And just to illustrate that challenge, when we go back to the beginning of 2023, we were forecasting export growth, European export growth, to be around 8% in cumulative terms until the middle of this year. When you look back, exports have not grown at all. So that's, I think, a very strong illustration that something is going on there. And it's not the lack of, say, global trade growth. It's really the inability of Europe to make use of that global trade growth. Second point, resilience. Now, I do want to add some nuance to the gloomy perception of Europe, because there are also sources of strength, despite that external weakness that I've mentioned. There's been remarkable domestic resilience in the European economy. You look at the labor market, for example. The labor market has defied historical trends. Traditionally, employment growth is around half of, say, output growth, of real GDP growth. But what we've seen since the beginning of the pandemic is that elasticity has increased. We're now seeing something that is closer to, a one-to-one relationship between employment and GDP. And that is not just labor hoarding. I think there are changes in the European labor market that are a sign of strength. And that strong labor market also enabled us to, has also enabled households to increase their spending. So it has created a virtuous cycle of job creation, and in turn fueling spending, and especially the growth in the labor-intensive sectors. Second point I want to make, another illustration of the resilience the European economy has shown, and I think it's an element that is underappreciated, which is the shift towards digital investment. When you look at intangible investment, so investment in AI, cloud solutions, digital infrastructure, that investment is actually surging in Europe. When you look at the data, you'll see that cumulative growth in intangible investment since the beginning of 2022 has been around 12%. Now, it may not be as strong as elsewhere, but it is clearly there, and I think it shows also firms' recognition that digital transformation is essential for competitiveness. Third point. Resilience clearly may be there, but it's not enough to address Europe's growth challenge. That's very clear. So if we want to move from resilience to strength, we must unlock the full potential of the single market. It has been said before, but it is really crucial, especially in services and finance. Despite 3 decades of progress, that intra-EU trade, that process has stagnated, and the barriers remain stubbornly high. Now, we will have some new analysis coming out soon that illustrates those barriers, and we will show that when you kind of measure those or express those barriers in terms of tariffs, that those barriers for intra-EU trade for services amount to something like 100%, and for goods they amount to something like 65%. They may sound familiar, those numbers, because the IMF has also done similar work, and those numbers have also been widely quoted. We go further than that. We add a number of things to that analysis, but I don't have time to elaborate on that right now. Now, I think one has to be very careful with those numbers because they really represent, say, theoretical upper bounds of, say, the potential trade that is there. You know, they also reflect differences in preference, for example, across countries, right? I mean, German households are less likely to drive French cars and vice versa. Italian consumers don't really drink Spanish wine and vice versa. So those things, of course, one cannot change by implementing the single market. But what the key point here is that there is a lot of potential there, and a relatively limited decline in intra-EU trade barriers can offset the impact of the higher US tariffs. So what concretely needs to be done? I think there are 4 things. I won't elaborate on them, but I'll just mention them here. So the first thing is reviving mutual recognition of standards. Second thing is streamlined decision-making through more qualified majority voting. And the third thing is the 28th regime. Now, I think there are encouraging signals here that, you know, things are moving. But my key point is really the European economy has shown resilience, but to address its growth challenge, we need to go beyond that. We need to really implement the single market. And that's not only crucial, but I think it's also feasible.